Okay, what's going on? Good evening, good evening. Today is July the 17th, 2025, and what we're going to be looking at today is the NQ, right? The MNQs is what I traded today. We also can look a little bit at NAS 100, right? So it's going to be very similar. It's just pretty much the same thing. Um, and we will look at, take a look here. We'll look a little bit of the comparison of like ES 1 hour and 15 because it was, really similar and really good price action, on the day. And then also before New York, there were so many opinions of individuals that I was just seeing posted everywhere that, in group chats that I'm in and just any places on Twitter and just everywhere that people really wanted to see the markets fall, right? And so if you guys don't have the template for the DRC, make sure you get that template. I'm going to be utilizing it here in a second, just kind of showing like what we've seen today. But what I really want to focus on today is um, what I improved upon today once I started showing the DRC. But some things I improved upon on, even though it wasn't like a giant winning day or just crazy day, it was like a very small win day because I got stopped out trying to attempt an area and then move risk into profits when the market made money available, and then price rallied like crazy, right? Okay, so I'm gonna bring up that document just really quick so you guys can kind of follow along with that, and then let me see here. Okay, cool. And so what we'll do is we'll bring up the document because I want to make sure that we can actually see it. All right, this time. So I want to say that you guys can see this, but just so you guys have an idea, I'll make sure and go in here and we'll read from here. But my bias coming into today, and when we look at the chart, I'll show you guys like the key levels. One of the things I said that was one of the bigger things today was one of the new drivers for me today was the fact that they had the 7:30 news, right? The red folder pre-New York, which brought in a lot of for me, I'll show you guys where, but like a lot of buyers into the market, which we ended up running that liquidity at the New York Open. So by seeing that 7:30 price, I had already had a bias of what I really wanted to see, which was what I put in the Discord, right? If you guys are a part of the Trade House Discord, then you would see that, right? I was like, what my bias was, I wanted to see a draw on liquidity down to daily open or 23,050, and then see price rally and see shorts cover, right? I wanted to see shorts cover the position because I wanted to see them cover quick so that price would rally fast, right? And so that was the expectation coming into everything that I want to see today. And to kind of give you guys a visual of what that looked like, right? When you're looking at like a 1 hour and a 15 is pre-New York, and just kind of like don't mind these just for a second because they're for when we go to the smaller time frame. But what I'm looking at when I come into New York, right, is it looks like this, right? Replay mode here would have been 8 to 9. So before we get this candle here, 7 to 8, this was the news area, right? So the news actually was here. If you guys kind of see this, right? That news price was actually here. 7:30 was right here, right? So this is where the news price was. These is where buyers stepped in. So you got to ask yourself, when those buyers stepped in, where do you think they put their risk, their stop loss on that previous low? All right, so the individuals that bought here at 7:30 for that folder, they put their risk most likely here, right? And they were wanting to attack that previous high to probably trail risk or to take profit, whatever they wanted to do, right? Now, what I want you guys to think about is what I'm thinking about is when I came into this at this would have been 7 to 8, so 8 a.m. I'm making my game plan, right? So right here, this would have been 7:45. This 15-minute candle opened. When it closed, this would have been 8 a.m. Now, something you guys can notice that was manipulation was the body closes on the 15, or excuse me, on the 1 hour, we're actually closing higher highs, showing signs of strength. So I wanted to see prices come up here at some point today. I wanted to possibly see a run on all-time highs because of how disrespectful they were the day before. Now let's kind of run back just very quickly here on 4 hour, 1 hour, right? Because yesterday we got the respect of the demand candle below monthly open, right? July monthly open, under market open. So if you're thinking about higher time frame perspective, that means essentially you are buying the low of the week, right? That's pretty good. Like that's a really good area to understand supply demand. And so now when you jump into the 1 hour, right, you see the previous day low and you see the low on day, they weren't really going to attack the low on day because like usually what I like to see if price was to stay like right in here, didn't go like this far and just kind of start to break it down, is an attack on that low of day, right? And then, people have to take profit on those shorts, right? Buy low, sell high because we're at the low of day, and then I see a price rally. That's what I like to see, right? So that's what we were anticipating, but we just weren't getting that going into um what we were wanting to see. We were getting a 1 hour closure and we were seeing that sign of strength. Now, when I seen this close and I seen how the 15-minute price looked, I knew that they had trapped buyers at this moment, right? So now let's think about this from a 15-minute perspective, replay mode. Okay. So we didn't know this would have been right here 7:45 into 8 a.m. and then 8 a.m. and 8:15. So they ran the highs between 8 and 8:15 coming into New York, right? So they'd already shown a sign of strength. They'd already clearly shown that they possibly, right, could want higher pricing to attack 23,200 and all-time highs, 20,220s, right? And so the only liquidity that was available at this moment, right, when it comes down to NQ, was price below daily open. I love to buy below daily open, right? Now, this is hindsight because I'll explain my position that I actually took, but because of the hesitation at this move right here is why I took the position I took, and then I got stop loss break even for a small win, right? So in this position here, right, we're looking for, okay, pre-New York, you have 8 to 8:15. That next candle is going to open, right? After I click the next button, it would be to the 8:30. So the location of where New York opens is very important, right? Because that's where they're setting up people. Now, what I wanted to see was, like I said, a little bit more of an extension down, like on this 15 to below daily, even possibly below LOD. And I was looking left, trying to come into this candle here, right? So just kind of measuring this candle's demand, looking over, right? And then wanting to see price come below Asian overnight liquidity, tap 23,000, and then do what we did today. That's what the bias, right? Like I showed you guys in the very first part, that's what the setup expectation was. But what they ended up doing, which I didn't really notice until I started doing my review, was that they set those individuals up at 7:30, having their liquidity right here. And then when they opened up New York Open, right? We got New York Open on this next candle. So this would have been right here, 8:15 to 8:30. And then this next candle is 8:30 to 8:45, right? We had our boom run on liquidity. You guys see how fast that was, right? That wick into the area below daily open, filling the 1 hour imbalance, right? But what did it really do? Right? What did it really do? It took that 7:30 news buyer, right? Someone trying to get in before everybody else, right? It took that news buyer's liquidity, drew on that liquidity, right? And then started to respond immediately, right? So I kind of want to show this like on a 1 minute now, right? Because we got the 1 hour, the 15, and the 5 down, right? So let's look at this on a 1 minute here. So we have like 15. Oh, excuse me. Right, so I just wanted to show that how that actually looked, right? On the 15 here, and I had the 1 hour, so and a 1 hour. So 1 hour wicked and 15-minute wicked right into daily open. Now, like I said, let's go here and let's turn this into a smaller time frame of what we've seen here. Okay. Because now what I was looking at on a 1 minute is where this is all going to kind of come together on like my entry strategy and what I was looking for, right? Now, what they did was that New York Open was right here. So you guys can see that. Like I put in here, this is a part of our bias. right? New York Open, price sells down right into daily open. Shorts begin to cover, right? 'Cause that's what I start to acknowledge a lot of the times at point of interest. Shorts begin to cover, buys are coming into the market, right? Now, there's a way to play this on the 5 and the 1 minute entry. Like how my cockpit is set up is I have higher time frame here to the left, mid-level, right? Like 1 hour 15.5 here in the middle, and then everything is 5 1 minute or lower time frame over here to the right. So this is what I was looking at to the far right side, right? And so for me, when they drew on that liquidity, where I'm just showing you guys where you can actually learn and where I hesitated, where I usually don't, right? Like I literally have a thing that right here it says pay yourself or make yourself or pay yourself as the market makes money available and act on your edge without reservation or hesitation. It just so happened to be, like I said, the expectation was a little bit too much that I had set for myself personally to see those Asian lows first. Okay. And so what they did was, I'm gonna kind of run this back here on the 1 minute. This is how I like to enter in a move like this on a 5 minute, 1 minute play. Okay. Because there's a specific thing I'm looking for on a 1 minute and a 5 minute price action wise for me to be able to trail my risk. Okay. And so one of the things that when we break down that New York Open price, you can see right here you have 830 to 835 prices goes down here and spikes into the level. Now this candle 835 to 840 we're still printing bearish at this point. So until for me like because it was accumulating, right, accumulating going sideways on daily open in that 23,070 area. Now the candle that exactly when I was watching on the 1 minute that I decided I was like, wow, this could be an area. I wanted to see a slight little area where I could have maybe played a little bit of a pullback because you guys see how fast this 5 minute just took off. So 840 to 845 and that 15 minute close as well. That candle just takes off. A lot of the times I'm fitting my trades into a 5 minute location and I'm playing a 1 minute mitigation, right? So what I mean by that is like I'm framing up a trade off of a certain specific low like this, and my trade usually goes inside the 5 minute demand location. And so if you guys look at it from this perspective, the only way to get that today was on that 1 minute was you see the manipulation at New York, right? So this is something I talk about all the time. I hope you guys can learn this from me because I've watched so many charts to see this. Okay, what they do is they get people right here and they know they have a target and they draw in a lot of people to short the market thinking it's going to fall off really fast, right? This is like what I call the influencer trade or the impatient trade or the inversion down trade. Like they get people with this trade, right? It's the classic one. So when you see it, right, what happens is the individual right here, they sell New York Open, probably putting their risk like somewhere in here, right? Somewhere like just somewhere on top of this 5 minute area or wherever, right? But what they're essentially looking for is that draw on liquidity, and they're either paying themselves super fast, right? They're doing something super fast. And that's why you're seeing the wicks and the responses in the price action print this specific way, right? But what you're really seeing to me from my eyes and perspective here is that, if New York's location would have been up here, it would have been different, right? Above old highs, plenty of room, et cetera. But because of the location of where it's at, the individuals didn't see the objective after this objective low. They didn't see price breaking down to go objectively down to the low of day. So what happens here? The individuals that are short, they start to cover their position. What happens when they cover their position? Buy orders fill, right? So with this location being here, what I was starting to notice was when that 1 minute, like you guys see here, shifted in price delivery, that's the entry area, right? Usually, like I said, I mean, I don't hesitate on something like this, but I just had an expectation of something else, right? So price runs up 840 to 841, right? And then bam, I like to, be able to frame up edge right there off that area, okay? And so knowing what that low of day was, 28 wasn't going to be where I was going to risk. And then I was looking to risk right around here because you guys know my game, 25, 25, 20, 15, and like a 10, right? 15 for 45 is a 1 to 3, 10 for 30, obviously, right? So you're always thinking in probabilities. Now, 25, that one I like to see about a 25 to, 75 handle move, right? So about a 1 to 3. on that trade. So does this fit my game? Now, here's the other thing when I'm playing a 15 5-minute, 1 minute setup, right? On the first 1 minute, 5 minute structure break, right? I should be able to almost secure at minimum, right? At minimum, a 1 to 2, right? On this way up. But in a 15 5-minute break, right, that I'm looking for, like on a trade just like this, like I said, this is just kind of breaking down how I would have played it. When I got this 5 minute break here, the technical, right, higher than here, at this point, guys, you have plenty of things to see to trail risk to. One thing I like to use is expansions and top end imbalances, right? Or down candles in an uptrending market, right? So as prices going in your favor and the market's making money available to you, you've got to have a way to scale out of a position like this, right? Because what happens to most traders when they don't play how I'm showing you guys in this location and supply and demand and inside the accumulations, they're getting caught playing what I call with the masses, right? So they see a 5 minute push up here, they're not playing it until like here. You get what I mean? If you guys see the location on the left side here. So why do they get stopped out in a position like this? Because they're coming for the late traders here, right? They're coming for those individuals who, they waited too long and they don't trade their plan, right? And they just said, well, I'll just try it here. And they buy here, and then price goes up, breaks the structure, right? Breaks structure here, and then comes back because what? The individuals who got in from the liquidity grab here are taking profit. There's going to be, you got to expect a slight pullback when structure breaks. That's just how the markets work, right? And so now you've got to understand how to get in, what's low, and actually what's really high, because how are you ever going to be able to find the entry if you don't know what actually low and high is, right? And so I hope this helps when it comes to understanding like that 5 minute, 1 minute area. And then what I'm looking for, I'm looking for a draw on liquidity, right? I'm looking for a shift in price delivery. I'm looking for a previous bar low that I can use as edge. And I'm looking for that setup when I do the probabilities. This is on a NAS trade, right? It doesn't matter if you're trading, $1,000 account, if you're trading, $500,000 account. These concepts and these probabilities work, right? If you frame it up this way, like I can show someone, let's just say for the micro for MNQs, right? They're going to be $2 a point for every contract you open. Well, if I go 100 points, I make $200, correct? So think about it. There's no difference if you have 20 cents and you went 100 points, how much would you be up, right? It's all works in tens, right? So you don't want to think about how much money or anything you're actually using. It's the skill that you have inside the framework of the edge, right? So this was the area, right? I thought this was a really good setup. The way it looked, if you're playing that 1 minute, like I said, I would have framed it up like this. One shift in price delivery would have liked it to pull back, but let's say if I would have played it, I would have played just like this, with about a 25 point risk, and then looking to scale out of that first 15 5 minute, 1 minute structure break to be able to. And why do we scale out, right? It's about availability, right? Because if I scale out and I add, like if I do a two contract system, so I'll kind of show you guys an example, right? But if I do a two contract system and I scale out, what I'm saying by making myself available is if price comes back to demand, I'm able to use the same risk placement. And if price is coming down at the right time, then I'm buying and going to get a better dollar cost average, if that makes sense. Okay. So, for example, just kind of show more of what it would have looked like here. You don't know if price is going to respond at this exact moment, right? We have no idea because they just draw on that or drew on that liquidity. But when you get that sign of strength, right now, right, on an NCE, next candle entry, right, you can actually start to potentially get a trade in. And you guys can see they didn't make that very easy. You know what I mean? So just to kind of show like hypotheticals, right? First candle would have been here, and then you get that next candle entry. Let's say hypothetically you're getting in here like this, a little bit lower, right? Because it always puts it on the close. So stop loss would have been this area here. And then we were looking, just so you guys have an idea, if you're looking on that left side too, we were looking just to get above that TP area here, right? So when the price extended on that next candle, of course, yes, you could have been playing this area just like this. Now, when price would have went a 1 to 2, right, of your risk or whatever you were risking, then it could have been safe to start to trail this risk up as well. But for me, as soon as it does this, right, and you've got that shift in price delivery on a 1 minute. Now you have another up, like an up candle on a technical here, right? You're going higher. What I'm looking for is down candles in the uptrending market. Okay. So as soon as we get this close here, bam, right? And that closes higher, you could, depending on how big of a trade you have on, you could start to trail that risk down to here, right? Right under your order. You could actually move your risk to the prior bar down candle in the uptrending market, right? If you just want to, no matter what, be available again if it comes back to demand. That's being very aggressive and just doing it in a way that you're not going to win a lot of setups because you're trying to control way too much, right? But if you're on your way up to an area and you just really want to get to that area and secure the bag, every time price makes money available, so a down candle in an uptrending market, you could trail that area. Okay. And so that's how, I would have played this buy. But like I said, I hesitated right here in this area because it didn't come back down to a little bit into the 93s. And that's just is what it is. So I had to wait. So what did I tell myself here after this? Okay. So we kind of have an idea. What did I tell myself after this? 15 and 5, I was watching on my middle screen. Is as soon as we broke this high right here, so you guys already seen this, the 1 minute entry. So I'm going to go ahead and move this, okay? So as soon as we broke this high right here, right, what I was anticipating was possible sell-off, right? Because at this point, I was like, well, we went down, we drew on that liquidity, and as I was looking left, we were potentially drawing on this liquidity, right? So at this point, this is where another, I would say, kind of mistake for me was today, because look how the scoops were. We drew on liquidity. So we have a 5 minute low. Now we have a new high, right? So if anything, I really, before I even want to sell this and think it's going to be something legit, the market's really never going to leave you, right? But I'd really rather see it something break down and then come back into an area that gives me more confluence of seeing already another lower low that where I can time something and play it down again, having like confluence from a nice candle as well. Okay, so that was already number one. Now, where I entered, right, it looked just like this. I'll kind of walk you guys through it here on the 5 minute very quickly. Give me 1 second here. Okay, cool. So on this 5 minute here, that price basically shot up just like this. So it looked just like this. We came up, we made a new high, and now because I hesitated on the buy position, I started to want to, okay, I wanted to go short. I was like, okay, I'm gonna go short here. I want to find when these buyers are gonna take profit and maybe attack this New York open low. Okay. And so next candle came, we got one sign of weakness, right? And in that sign of weakness, there was another candle and there was like 1 minute mitigations that I was looking at. And I was looking at this area. So right above here, I was going to kind of show this. I took my trade when the price was falling. So I'm just going to place it here. Sell side was here. Stop loss was at the current high of day at that moment, right? And the take profit was to attack down and attack the daily open and New York open low, right? And so that was the goal. And then giving back below daily open, right? That was kind of the goal. But this ended up what happening, okay? So we get that next candle to print. Price is looking good. We ended up closing this next candle under 23,150. As soon as we did this today, this is something I want you guys to understand that, I had to learn. But shorts are short-lived. Okay. So shorts are short lived. And so when price moves in my favor and starts making money available, right, breaking structure, I started to personally trail this risk down, right? So I was already in probably like around the 160s, right? And I trailed my risk down to that 156, right? And so price started to go down, right? Started to go down. We had no idea if they were going to take that New York open low, but let me show you guys what was happening, right? This was 920 to 925. Then the next candle was 925 to 930. You had massive buyers step in. What did you have though on that left side, guys? Think about it. Let's think about this really quick, okay? We had a 15-minute demand candle, right? Price had already confirmed new highs, closing higher here, right? Closing higher here, closing higher here. So all this was to me was a slight bit of profit taking, right? On those buys, right? The buys that bought up from daily open, they took a little bit of profit here at that new high on current day, right? And you just seen a slight pullback into the demand, and then boom, price rockets, right? So that's about what happened for me today. It was like I hesitated on that daily open position. I ended up shorting here and around the 923 160s, putting my risk at HOD. Price moved in my favor. Shorts are short lived. I moved my risk to about probably 6 points in profit, right? I got out of there, guys, with like a very small win that day. And then I had to sit there in agony, right, and watch the rest of the day, just like any of us have to do, of it just rally up. Now, one thing I did good today, right, when I talk about improved upon, when I took that trade, that was my only trade of the day, and it was a small win. I was grateful for what I was able to execute on. I didn't have to try to go in and beat the markets or win or, do anything like that. Right. And so I'm I was happy for what I was able to do, even though, like I said, I didn't execute exactly how I wanted to on that daily open position. So what did they end up doing? Right. Just to kind of show the 4 hour, 1 hour here as well. It was another continuation day, right? When you really think about it, right? 1 hour imbalance fill. This is all this was here on this side at daily open, continuation type trade. But think about this really quick. This was a demand play, correct? The day before off of the 1 hour H4 demand. And it's clearly here, H4 demand play, right? Off daily open point of interest to rally up to all-time highs. Like, I mean, that couldn't have been any cleaner of a setup. So can't win them all. You're not going to catch them all, but it's always good to come back and review the little nuances of ways that we can actually, take advantage of those opportunities in the future. So I feel like I've ranted quite a bit. I hope that helps out with, seeing it from that smaller time frame perspective and just kind of how, I maneuvered in and out of that today. And like I said, I wasn't on the right side of it, which was okay. And but still learned a lot. Okay. So real quick before I do hop off, I would do want to just follow up with I'm not a financial advisor and none of the stuff that I say is financial advice. It's just stuff that I like to share from being an obsessive and person when it comes to like trading and investing. Okay. So in this next part right here, this is just something I'm really excited about. This is ICP, right? So this is a cryptocurrency. So if you guys aren't used to crypto or maybe you are used to crypto, I'm going to kind of break down, how you can evaluate this position from a multiple standpoint of capital, right? So if you have $100, $1,000, $10,000, $50,000, whatever it could be. I'm going to show you how you can calculate the math here very quickly on the percentage gain of what's possible here with ICP. Okay. And so just kind of looking at this, if you guys are looking, if you're buying, in this area, this is the weekly ICP. This is the price level here is about $5. To buy an ICP. So just kind of give you guys an example, like Bitcoin right now is worth what, $120,000. All right. So one Bitcoin is worth $120,000. Right. So imagine if you could buy Bitcoin at, $5, $6, right? So the cool thing about this is that the potential has already been up to here, right? So even getting back to, equilibrium, you guys know I like to play 50% equilibrium plays. Even getting back to here is crazy. Getting back to, 90 or 100 would be crazy, right? From $5 per, right? So when you go in here and you look at this weekly, this is like I just love the price action of how it looks right now, and you're looking at just like actual typical targets. We were looking at this is a demand candle because I was looking at this one at first, right? But it broke and never seen a sign of strength above 7, so I just was going to continue to wait until we got possibly into this imbalance here inside the $4 like 350 range. But now we're starting to set a little bit better here, and I like how this is forming with the alt market, right? Being the alt season. So just saying, like I said, let's just hypothetically say you use $1,000 and you're going up to this price target area here, right? You're looking at from if you got in at $5 here, like $5.80, and you get out at like 11, guys, right there is showing you you'll be up about 100% on your money. Okay. So if you put in 1,000, you'd be up your account on Coinbase, right? Because you can actually purchase this on Coinbase, would be up to 2,000, right? So it's pretty crazy to think, the investment, if you can get back to this high of $20 per, right, from this area here would be about a 290% return. So let's just kind of round up to 300%, right? So now you're thinking, 300% return just to here. Now think about the scope of this. Remember I showed you guys, right? You know, that's just getting the price targets like 20 and 21, okay? So let's take this from where it's at now, $5 essentially. Let's just go to here, right? 1,500%. Getting to the target area of 150 is like almost 3,000% return. Okay. So we're here. Yeah, we're here right now. But what I'm trying to show you guys is like if this can happen like this, like it scales down like we've seen, this becomes that demand candle and we start to see a price start to build, this could be a really, really nice situation, right? Now, another one is Dogecoin, right? I really like Dogecoin. I ended up playing this position back in 2024 in September. And so this was the 10,000 area, and then just was wanting to get right above this, right, was for 120% return. Okay, so when you were looking left, you're going from here, right, and this has already happened. This happened in 2024 in September. So imagine what could happen when I'm about to show, okay? So this went up and we started exiting around like 42, 45. That was over a 300% return, right? So if you put in $100 for for every dollar you put in, or yeah, if you put in $100, right, 300%, you would have made what? Um, you would have had 600 in your account, right? So I mean, that's crazy, right? Just to think about, the percentage returns on some of these. Even if you put in, let's just stay with $100, right? You invested $100 into this and price went from here to here, right? 300% return. I mean, you'd have your 100 plus the other three, right? So that's pretty crazy to see. Now it's a little bit harder for me to evaluate this on a daily and really be like, oh, okay. But on a weekly, we have time and so you let supply demand kind of build up. I like this area still as well. I think they could still slip it a little bit more into the red area, so like 1250s. But let's just say that you're actually monitoring this and watching this, had alerts, etc. Well, you could be looking at this area here, up to this area, right? Up into the supply area 44. So let's say you're getting an average cost like 16, 17, like 18, somewhere in there. You're looking at like a potential over like 165% return, which is crazy. Okay. So there's that. There's Dogecoin. I went over that, and then what was the other one? XRP is really popping. I mean, a lot of people just bought in like just now, so that's going to be a really good one, obviously. It's at all-time highs though, right? So I'm trying to show you guys opportunities that aren't already crushing the all-time highs. All right. Now it could be a great play. It could be when you read about it, stuff like that. But I'm just saying for your dollar cost average right now, I would rather wait until price came into another spot that was a better buy for me on that one. Um, so okay, we did those. We talked about ICP, and then Ethereum. Just really quick, I've been calling this out in the Telegram. If you guys have been in the Telegram, since here, right, 1757, right, below 1800. So just to kind of like recap on my story with this, back in 2022, this around this area here, I had bought some Ethereum under. I had bought actually Ethereum under 1,000 a coin, so it was like somewhere in here, right? And then price started to rally like 70%, paid myself some, and then as it trickled back down, I ended up getting out, right? So where I actually got out, which was like right in here, it's kind of crazy to see, but I essentially, right, expected value between 1,800 and 16, got that same price back again, and I have a better target this time. Okay. and I have like a more for sure confidence in that target to be able to unload some price to a new buyer, right? So what I mean by that is like I bought down here right below 18, but there's going to be someone as soon as price breaks 4,000, they're going to be willing to buy, right? And what I'm praying and wishing on because of this double top is that someone is sitting here at this 4,000 level, which they should be, right? Ready to buy, thinking like, oh, I don't want to miss the boat on ETH, and they're ready to take my order so I can take profit. That's what I'm expecting, right? So I hope this isn't, like too much, right? I just kind of wanted to go over this because I do love cryptocurrency as well. And with Bitcoin going to all-time highs, 120,000 like this, that's only going to bring the altcoins to super modes like this, okay? And look at the return on this since we've been talking about this, right? The return has been almost 100% in about 70 days, right? So maybe we can, before 90 days is the goal is what I wanted to see because that would beat my Dogecoin. But before 90 days, get to the target and then hitting about 130, 150% return would be pretty crazy. So cool. I'll leave you guys with that because, like I said, I did kind of go over a lot when it comes to NQ and just seeing the 4 hour demand, 1 hour imbalance fill, 15 5 minute mitigation play, right? And just absorption plays. So that being said, I appreciate you guys watching and drop something in the comments if there's anything else I can change. And you know, don't miss the boat on some of this ICP, guys. I mean, I'll say it again one more time. I mean, this looks really nice. So have a good night, and I'll see you guys on the next one.